So hello everyone. I hope you're all well. So yeah, I'm going to be talking about buy now, pay laters and traditional fintechs. Can innovative fintechs take over the credit card sector? And special thanks to all of my mentors. So my main research question is what is the effect of buy now, pay later operations on credit card lending in Australia? So since I last presented, I had just sales as my buy now, pay later independent variable, but I decided to expand that a bit and focus on customer number as well. So in general, I will use this analysis to answer the bigger picture question. Do buy now, pay laters have the potential to take over the credit card sector? So just a little bit of background on consumers. So the millennial generation is predicted to be the largest living adult generation. And it's this shifting demographic that's a cause for, of course, an increase in buy now, pay later consumer base, because 60% of users, people that use buy now, pay later are between the age of 18 and 24. In terms of banks, credit card lending is declining, and users of credit cards tend to be older, and usually they are receivers of higher income. So very contrasting to the younger generation of this era. So my study to estimate all of this type of stuff is to use a time series regression, and that's where I'll be using RBA payment statistics. And I'm also going to be using a panel regression, so for bank level analysis with bank fixed effects, and I'll use APRA data. So what is the story? Just focusing on the country level part of it first. This graph just shows a sort of the climb of buy now, pay later credit and debit in the market, just all over Australia. This is not specific to banks. And you can see, you know, credit was higher than debit at a point, and slowly that's kind of shifted, crossed over. And you can also see a decline around about when COVID hit in, you know, early 2020. And you can also see that buy now, pay later sort of persevered through, and their, you know, incline kept going. Just to give a bit more of a visual interpretation of that, this pie graph from March 2015, buy now, pay later is there. It's just very minuscule, so it's not very visible, compared to June 2021, when they've got a small slice of the pie now. This is still looking at those RBA payment statistics. Moving on to the banking story, this is just loans to households, credit cards in millions of dollars, just the raw data taken for ANZ, Citigroup, CBA, NAB, and Westpac. And you can see that sort of decline hitting at about 2017. And as it goes down, you can also see a similar drop compared to the RBA data when in early 2020 when COVID hit as well. So moving to my country level analysis equation, I've got here credit card transactions on the left-hand side variable, which is the total value of credit transactions, and then buy now, pay later. So I've just used buy now, BNPL for this one, but I changed the independent variable in different models. So one independent variable is buy now, pay later sales, and one is customers. Then I've got debit transactions, which is total value of debit transactions. Credit limit is just a percentage change in credit limit of credit cards. Then I've got a dummy variable for the presence of COVID, dummy variable for the Sydney lockdown / heavy restrictions, and a Melbourne lockdown dummy variable for Melbourne lockdowns and restrictions. Now, everything with an asterisk is taken over a fraction of total spending, which is summed by proxied by summing credit, debit, BNPL, and check. Just taking types of payments that can be substituted for each other in a way. So moving on to the bank level panel regression analysis, I've got credit card lending on the left-hand side, which is the bank's issued credit card loans, and the bank fixed effects. The bank control, which I change between as well, depending on the model. So it's either log of total assets, or it'll be loans to deposits. The buy now, pay later variable once again, and then the remaining variables are the same as before. So my hypothesis is that BNPLs continue on an upward trajectory. Country and bank analysis will show that BNPL sales and customers has a negative coefficient. Debit card transactions will have a negative coefficient on credit lending as well. So going over to some notable results from my first, so this is my country level analysis, and my independent variable here that I focus on is BNPL sales. And I've added a couple of interaction terms just to single out the effect of COVID. So you can see some of the notable results are that the BNPL sales over total spend, the sign switch from column 2 to 3, where I added an interaction of COVID and BNPL sales. And that negative effect that you can see here is sort of absorbed by that COVID interaction, resulting in an almost $11 million decrease in credit transactions for every $1 million increase in BNPL sales. So column 4 highlights a negative debit COVID interaction. Even though you can see that all debit transactions are consistently positive, the individual ones. So I think that this can be attributed to how most credit cards will be linked to debit, but during COVID, it seems like debit cards will probably link to something else, and I would suggest that would be BNPL in this case. So that's the first country level analysis. Then moving on to the, this is also country level analysis, but I've got BNPL customer number instead in the independent variable, which I focus on. So there's a significant negative impact seen in column 3, and it just means that the economic impact is not as significant. 1% increase in BNPL customers causes a $300 decrease in credit. Column 4 highlights a negative debit COVID interaction, similar to before, even though debit coefficients individually are consistently positive, and it shows a $680,000 decrease in credit transactions. Now, So moving over to the bank level analysis, once again, I've split it up by the independent variable. So if this is BNPL sales, you can see the BNPL sales coefficient in column 3 is negative, and so is the interaction coefficient, which suggests a 1.8 percentage point decrease in credit cards over total loans when BNPL increases by $1 million. Similarly, column 4 conveys negative significant debit COVID interaction, also similar to before. But you can see that it seems like based on the significance of these variables, banks have been more negatively affected during COVID rather than normally. So this is the bank level analysis with BNPL customers in the independent variable instead. And you can see that Sydney lockdown is highlighted as having a positive effect on credit card lending, and that could be because of the surge in online shopping when everybody was at home. Additionally, the COVID interaction is negative and significant. Although the Jacques Barre levels of all of these regressions are quite high, so I would suggest that the explanatory power is lower compared to the previous model where I used BNPL sales. So for robustness, I've got those results in the appendix, but I thought I would just go through them like this. For the country level analysis, I decided to do a 2-stage least squares estimation. And this estimation indicated signs consistent with the original regression when I used BNPL sales as the main test variable. So my instrument in this was average Google mentions of the 4 BNPL companies that comprise the BNPL variables. When I used BNPL customers as a main test variable, all variables had the same signs besides BNPL customers. It was actually positive, but it was insignificant. For the bank level analysis, I decided to use an alternative dependent variable, and this garnered similar and significant BNPL coefficients, but overall the estimations were insignificant for other variables. So my conclusion based on the hypothesis is that BNPLs continue on an upward trajectory. Overall, country and bank level analysis has shown that BNPL has a negative effect on both credit transaction value and bank credit card lending. And bank credit card lending specifically, you can see it's negative during COVID. So debit card transactions, they individually had a positive effect in country and bank level analysis. However, when I interacted that term with COVID binary variable, it produced negative coefficients. Just some limitations that I had while I was doing this research. A lot of it was based on data, just because BNPLs have only come into existence in the past 6 years, so data is of course scarce. And it involves a lot of hand scraping to find this sort of stuff, and some companies aren't as transparent as others, so you have to sort of just see what's available. So as more data becomes available, I think results will become more robust and more informative. Results discussed in this thesis are a key indication for other countries. So other countries that might be experiencing a BNPL surge now, or they are soon to experience BNPLs entering their economy. This will be sort of a precursor for them to understand what effect they might have in their overall credit lending market, and as well as their bank credit lending. And this is provided that they have a similar economic outlay as Australia. So for future research, I would suggest looking into policymaker concerns, something that I just wasn't able to get to. But there's a lot of problems surrounding merchant fees and the no surcharge rule in BNPLs. And I would suggest also expanding into other countries based on availability of data, like comparing North America, UK, and Australia, where a lot of these same companies that I've used are quite big. But yeah, that is all I've got to say. Thank you very much for listening, guys.